Welcome to the Bounty Zero X podcast. I'm your host, Angelo Adam, founder and CEO of Bounty Zero X. Bounty Zero X is a decentralized bounty hunting network powered by the BNTY token. Today is February 13th, 2019. My guest on the show is Ryan Rodenbaugh. Ryan's business development lead at Trust Token, and prior to that, he was an investment analyst at Blue Run Ventures, and he's an alumni from University of Arizona. So, Ryan, welcome to the Bounty Zero X podcast. Thanks for coming on.
Yeah, definitely. Thank you for having me. And Arizona State, I wouldn't want to be confused with U of A.
Okay, Arizona State, excuse me. Ryan is Arizona State alumni. So tell me a little bit about Trust Token and True US Dollar and what you guys are working on.
Yeah, definitely. So, Trust Token is a general asset tokenization platform. And the first asset that we've tokenized is TUSD. So the US dollar. You can think of TUSD as true USD or as tokenized US dollar. For now, TUSD is mainly used for trading on exchanges, but hopefully will be used for many other things down the road.
So can you define what a stablecoin is for those of us or our listeners who have heard the term but don't know exactly what it is? I mean, aside from what the name implies.
Yeah, certainly. So a stable coin would be, I don't know that there is an agreed upon definition, but I would say at least a stable coin is something that holds value relative to something else, right? So you could be stable relative to the dollar, to the euro, to anything, frankly, any other currency or real asset. And in our case, TUSD is stable relative to the US dollar.
So stablecoins have sort of an interesting history in the cryptocurrency space, and I think that there's definitely a need for stablecoins because of the fact that the value of the tokens that are not stable fluctuates so widely, and therefore makes it difficult for those tokens to be used for business purposes, like long-term contracts or just as stores of value that maintain a stable value over time. So the benefit and sort of the feature of stablecoins is that they can be used for these purposes. And so over the course of the cryptocurrency evolution, there was, first Bitcoin followed by a number of other coins. And I think the first stablecoin was the US dollar Tether. Is that, as far as you know, the first one?
Yes, there might have been another one, New Bits, around that same time, but basically forgotten at this point. Tether launched, I think, in some point in 2014, but really didn't rise to prominence until the bull run that started in 2017.
Yeah, so one of the uses of Tether was on like exchanges on like Poloniex and other exchanges where it was used as a margin asset, as a trading pair you could trade on margin against. And it's had somewhat of a notorious history. It's been linked, I think, with Bitfinex, and they recently moved to Bermuda. And there's been some questions relating to whether it's actually an asset-backed token and what and how stable it will be if there is some type of risk involving the legal framework underpinning the Tether. Do you have any thoughts on the Tether token as a whole and some of its shortcomings and what your thoughts are overall on that?
Yeah, I mean, I've got many thoughts on Tether, but I think if I had to kind of sum it up in one bite-sized thing, it would be back in October. The price of Tether fell down to 85 cents. And if you'd been tracking the OTC prices of Tether for the couple weeks prior to that, you'd seen that the quotes had been getting worse and worse. So let's say in August of 2018, for example, if you went to an OTC desk and were selling BTC for USDT, you'd get quoted USDT pretty close to a dollar. And then in the weeks in September and early October, you saw that falling down to 0.999, 0.998, 0.997, all the way down to like 0.995 in some cases, which is, very, very low for something that's supposed to represent $1. Then, in like October 15th or something, the price of Tether across exchanges crashed down to 85 cents. If, that just, like, in my mind, completely broke the idea that Tether was a good and reliable stablecoin. Much like money as a whole, the value of stablecoin staying at a dollar is largely psychological. If you can't actually redeem the stablecoin for $1, then it sort of loses the appeal of being a stablecoin. And I think that that's what happened with Tether around that time. People stopped believing that they could actually move from USDT into USD, and people lost faith in it.
And
Since
what?
then, we've
Yeah,
seen the
sorry.
price come back. We've seen the price come back since then, but still, I mean, people have their doubts.
Yeah, and so what do you think was the impetus for that uh, fear of being able to redeem? Because they seem to have some lack of transparency, and from my understanding, as an outsider just reading the news, there was a lot of uh, like a lack of transparency and communication, and a lot of uncertainty as to uh, what was going on behind the scenes at the US dollar tether. Um, so, do you know anything about what type of business and their framework as a stablecoin compared to some of the other stablecoins that have been released since then?
Mm. Yeah, so I also don't have any sort of insider info of what's going on there. I wish I did, and I feel like one day it'll be a great book or movie because it's definitely an interesting story what's ever going on at Tether. But uh, you know, yeah, on the transparency side, that's definitely been their issue. Sort of back in January when we announced TUSD, one of the things that we really focused on was the fact that Tether had done such a unique job of proving out that there was a massive market for a dollar-backed stablecoin, but at the same time had really corroded trust with people in the industry because they had failed to produce, any sort of proof of funds, basically, that the funds backing Tether were actually held in the banks. Then the fact that they kept getting kicked out of all the banks that they were with also didn't help add trust to people in the community. And then lastly, the fact that they didn't allow people to redeem for US dollars really scared people because it's hard to overstate, but the ability to move from stablecoin back into the asset that is pegging it is really what keeps it stable in such a meaningful way. And so I think those three things sort of corroded trust that people had with Tether. I don't know what happened on that day in October where the price went down to 85 cents, but I wish I did because that was really such a shocker.
So, moving to today, there have since been quite a few other stablecoins that have entered the market and offered some type of improvement or some type of or acting as competitors to US dollar tether. But even to this day, US dollar tether remains the market leader in terms of market share of the stablecoin market. So I think I saw a graph which I can link to in the show notes so that our listeners can take a look at it of the 4 or 5 different stablecoins, and it looks like at least 70 to 80% of the market share is U.S. dollar tether. Uh, have you seen that, or are you familiar with that graph? And what are your thoughts on the fact that U.S. dollar tether is still the major market share uh, uh, holder of all the stable coins?
Yeah, I mean, it definitely speaks to the sort of network effect that Tether has established. Just almost any exchange that you go on is going to have trading pairs denominated in USDT. And as a result of that, so many people either have exposure to Tether directly in their, in their trading, being held offline, sort of like as a digital bank. And you really can't overstate the liquidity that Tether has across the board. So Tether, I think, and I haven't looked in a while. I think the market cap of Tether is maybe something like 2 billion or 2.5 billion, and the daily volume can be anywhere from like 2 to 3 times that. So Tether will turn over $4 billion worth of Tether daily in on exchange trading volume. That's really pretty unprecedented. I mean, most days it's doing, it's only second to BTC in terms of the amount of trading volume. So that is definitely something that's been difficult to overcome. We've been doing a really great job in growing the market cap steadily over the past couple months, along with meaningfully growing liquidity. But just to really put it into perspective, Tether can do $2 billion worth of volume a day. And for the month of February, we'll probably do $2 billion of trading volume over the entire month. So, it's definitely a long haul. But we're in it for the long game.
Yeah, so you guys have recently hit the milestone of $1 billion in trading volume, and I think that was back in October or November. And since then, you just mentioned that you guys are now doing around 2 billion in trading volume per month, uh, and you guys are doing around 40 to 50 million daily volume. Is that still right, or where are you guys daily volume nowadays?
Daily volume, I honestly I'd have to kind of pull up CoinMarketCap real quick and check. I think we're averaging right now probably something like 30 or 50 million a day. Uh,
Mhm.
yeah, I'm seeing 46 for yesterday. Yeah, I think we hit an all-time high a couple weeks ago of like 110 or something. But yeah, I'd say about somewhere between 40 and 80 is pretty average these days. Maybe so about 60 is the median there.
And your escrow, so your outstanding minted tokens is at around 210 million or 207 million currently.
Yeah, we've been bouncing between 200 and 210 for the past couple weeks.
And that number has been steadily increasing over the past few months since you guys launched pretty
Yeah,
rapidly.
yeah, absolutely. So I mean, the first big catalyst was back in May. We listed on Binance, and I think when we listed on Binance, our market cap was maybe 40 million. And Binance has done a lot to grow the market cap for sure, along with many of the other exchange listings. Um, and then also the October 15th crash of Tether, we saw a massive uptick from that point on.
So are those the metrics that you guys are looking at in order to measure success? Are you looking at the outstanding escrow accounts, balance, and then daily trading volume and monthly? Are there any
Yeah,
other metrics you guys look at?
yeah. So market cap or TUSD minted is definitely one. Uh, we're also always curious of places like, where our counterparties are coming from. Are we expanding geographically? So to begin, certainly most of our users were coming from the US. Now we're definitely seeing more users coming from, say, Asia. We're beginning to see a lot of interest from Latin America. We see all those as promising things to track as well. But, certainly market cap is king. And then volume sort of an input to market cap almost. The more volumes that you're seeing, the more TUSD that's turning over, the more people that are learning about it, etc.
So when looking at the different stable coins that are out there and making a analysis of what makes a good stable coin, we talked earlier about transparency being an important factor, and then also the ability to redeem the token on a one-to-one basis for its underlying value. So in the case of a US dollar stablecoin, one to one. And then you also would want, proof of funds so that, an independent third party can at any time do an analysis or an audit and see that the number of funds that, guys claim to have are actually there. And then there's regulatory compliance, which is also another important factor. So do you have any comments on those factors and just overall what makes one stablecoin? What are important components of a stablecoin?
Yeah, I think you nailed it there. Definitely of those, they're all important, and I don't want to I don't want to make listeners think otherwise. I will say though that I definitely think personally, and I don't know if this is the company opinion, but it's definitely mine, that the ability to redeem and move back into a dollar is the most important of those. And so, we can sort of go back and forth around, who's the most regulated, who's the least regulated, who banks here, who banks there. Uh, in all cases, though, the ability to move back into a dollar is, it's kind of like the cash is king kind of thing. Most of the people that are using stable coins these days are traders, market makers, arbitrageurs on exchanges. And the ability for them to move back into a dollar is key. And so, we've seen a lot of press lately about, some of the other stable coins, which I don't need to mention their names, but that have been either blocking redemptions or making it difficult for people to move back into fiat. And as a result, we've seen people steer away from those stable coins. And we've, definitely on the OTC side, we've seen their prices quoted way off of $1. So I think that is the number one thing. We can talk all day about, all these different things that you mentioned, which are definitely important. I don't want to understate that. But at the end of the day, if someone tries to move $1 million of stablecoin back into fiat and they can't do that, that's an issue.
So, what would be a reason why someone would want to issue or redeem uh, US dollar, true US dollar through the portal? So, you guys have a portal where users can log in and register, and they can take their tokens, their true US dollar tokens, and then um, basically, I guess, burn them, and then have the US dollar equivalent value sent to their account after they go through the KYC process. And then conversely, they can, generate or mint the new true US dollar tokens through the portal, which is, I think, like app.trueusdollar.com. After, completing the KYC. And then once the wire is sent, then the uh, the funds are sent to the corresponding Ethereum address. So, what is the reason why a party would want to go that route in order to uh, either exit or off ramp, on ramp or off ramp out of crypto or into crypto versus going to an exchange and exchanging for US dollar on like a fiat on ramp through an exchange by directly trading it with like Ethereum or another stable coin.
Yep. Oh, and I just wanted to say our website is app.trusttoken, TRUSTTOKEN.com. But yeah, so I think that the big reason why you'd want to do that is that, let's say you went to an exchange that had BTC to US dollars. If you either way you're going on that trade, let's say you move BTC off of Binance onto Bittrex, and now you want to go from BTC to USD on Bittrex. In the time that you're moving the funds from Binance to Bittrex, you're going to be subject to some sort of price risk, right? Moving funds off of Binance onto Bittrex, there's going to be confirmation times. You're going to have to log in from one to the other. That could be anywhere from 30 minutes to 30 hours. Again, like the confirmation times moving crypto off of these exchanges can be very long sometimes. And in that case, I mean, the price of Bitcoin could move hundreds of dollars in that period. And so what you thought was maybe $10,000 is now $9,500. By doing this with a stable coin, you can have a little bit more peace of mind that in the period that you're moving either US dollars into TUSD and then onto an exchange or vice versa, that you're not subject to that price risk. It's also worth stating that our creation and redemption process is so seamless. I would say that compared to any of the fiat exchanges, it's actually a lot easier of a process to go from fiat to TUSD or TUSD to fiat. On the USD to TUSD side, we actually just rolled out an update in our app where when you create TUSD, you can have that TUSD sent directly to any exchange or wallet that supports TUSD. All right, so let's just say, for example, you were going from dollars to BTC on Coinbase, but you wanted to trade that on Digifinex. If you bought the BTC on Coinbase, you'd have to first have it, added to your Coinbase wallet, then move it to Digifinex. With TUSD though, since we have no exchange associated with us, we'll create it and send it to anywhere. And so that's very easy. Then on the redemption side, once you get set up with KYC in our app, every account is given a unique redemption address. And so when you have that address, if you have TUSD on Binance, you can just send it directly to that address. We will know that is associated with your account, and then we'll initiate the burn and send the wire out from there. And so that's even easier than moving it onto an exchange and then moving back into fiat from there.
And are there any fees associated or any other costs associated with that process of redemption or and burning and creation?
Yeah, that's an excellent question as well. And I should have mentioned that. So all of the exchanges will have fees. We actually don't have fees on creation or redemption, other than any sort of international wiring fee, right? If we're wiring money to Latin America, maybe there's a $75 fee or something.
And you accept wires from any bank, basically, that has like Swift and that can accept wire transfers. So no limits aside from terrorist countries and that sort of thing. Basically,
Yeah,
any bank can send it.
yeah. Any bank that supports U.S. dollars, we can send it to, and yeah, no OFAC sanctioned countries or anything like that.
So, what is the time that it takes from the wire to having the TUSD sent? I mean, you recently announced that you had decreased that time significantly. So, what are you guys at now, and do you see that improving, or what are the bottlenecks for making that faster?
Yes. So right now it's going to be either same day or next day, sort of depending what time you send the wire in, right? If you send it in at like 1 o'clock in the morning, it's going to be next day. If you send it in at, sometime in the morning, it's going to be the same day. We did decrease the time so that once the wire settles, your TUSD will be created in less than 15 minutes, which is great. On the wiring side, it's really just continuing to work with the banks so that they can be faster and more timely on that. But we hope to get to the point where it is always same day. But still, right now, a lot of times it is next day.
And you guys mentioned that you're working with multiple partners for providing these escrow and custodial services of the funds. So are each of these accounts segregated, or are they pooled?
Yes, no, good question. They are segregated accounts. We want to make sure that our funds are separate from other funds.
And so how do you, when someone is burning tokens, how do you, I guess, determine which tokens to burn? I guess on that side, are they segregated? Like corresponding tokens correspond to a certain escrow account?
Um, corresponding. I'm not completely following the question, but so when each user gets set up with an account in our app, they will be pushed onto one of our escrow partners, whether that's Prime Trust or Alliance Trust. And then, you can sort of think of it like, you know, well, because, so here's the thing. Let's say someone mints 10,000 to USD, but then tries to redeem 20,000 to USD, right? Which is totally fine, by the way. But, if someone did that, I guess what you're saying is their funds would not be then segregated in the same pool.
Yeah, because they would be trying to redeem more funds than they have, so they would have to get the remainder of those funds from a different pool, I guess, if it was
Yeah,
the same person.
yeah. I mean, like on our end, I guess. Good question. I haven't personally thought about that, but I mean, it's all sort of coming from the same place. If it were a point where one of the pools were low, we would just sort of port them to the other trust company.
And you guys are working also with Cohen's as your partner for auditing. So you guys do pretty frequent auditing to um, maintain what we were talking about earlier with proof of reserves. So um, can you tell me a little bit of that audit process? And so that's technically not an audit. That's technically just a certification of some type, and that's needed for regulatory reasons because you guys are based in Nevada. Is that right?
Uh, yes, yes and no. So we work with Cohen and Company, which is an accounting firm in the U.S., and yeah, and you're correct. They don't provide an audit. They provide what's called an attestation, which I'll usually kind of call like an audit light of our funds. They'll come in on a monthly basis, and we published all of these on our website going back to March at blog.trusttoken.com. And they'll publish an attestation basically asserting the amount that we have held in escrow across the accounts, along with a sort of certification that there have been no material changes to our terms of service, right? So besides just verifying their funds, they're also coming in and verifying that, hey, the trust token team has not made it so that they can run away with your funds and you have no legal rights or anything. So they'll come in and do that on a monthly basis. And was there a second part to that question?
No, that's all of it.
Oh, okay.
Thank you.
Yeah.
So, do you think there is a demand for uh, another type of stablecoin for, let's say, euro or yen or other types of foreign currencies, or baskets of currencies, or other types of representations of financial instruments?
Yes, I definitely do think there is demand for other fiat-backed stablecoins. I think right now it's tough to say which one um, would have the most demand. Unfortunately, I think some of the most interesting ones are also countries that have, strict capital controls where, it's a bit tougher to operate in those countries. Things like KRW or JPY, where the government has a bit more of a heavy hand. I think those are very interesting countries. They're just a little bit tougher to operate and do business in. I'm also curious in just other models of stablecoins broadly. You know, uh, there's so many algorithmic stablecoins that are either in development, actually, yeah, all of them are in development. None of them are live. I'm really curious to see what happens when, maybe one or two of those go live this year. Maybe like Terra or Reserve. I'm super interested.
Yeah, so there's these algorithmic. So let's talk a little bit about the difference between the algorithm-backed stablecoin and what you guys are, which is an asset-backed stablecoin. So can you define the difference between those two?
Yes, I'd say broadly there's actually three buckets. There's us, which we're fiat collateralized, but I guess you could kind of broaden that to be asset backed. Then there's ones like DAI that are crypto collateralized, and then there are the algorithmic ones. In the algorithmic camp, the most famous was Basis or Basecoin, which raised $133 million in April, and then closed down in December, or maybe that was November. Yeah.
Yeah, I think it was December, November, yeah, around then.
Yeah, but there's a couple other of those as well. I mean, the big thing there is that they are, we call them algorithmic, but I think that they could also just be called unbacked stablecoins, right? So they are not backed by any sort of collateral, and they rely on, complex algorithms to keep the price stable. So, you can kind of think of them as like recreating a Federal Reserve and kind of being the money printer. Whereas in our case, you're just collateral, you're kind of just tokenizing the dollar. Um, I I think that there's definitely interest in the algorithmic camp because I think that they're probably a bit more profitable than the fiat collateralized model in that they usually have a two token model where maybe the second token appreciates in relative value to the actual dollar pegged token.
Yeah, and there's probably some overlap between those crypto collateralized like DAI and an algo coin like Basecoin would have been, or Terra or Reserve, um, because I think that the algo coin, um, and the DAI are somewhat similar, because like you said, there's the two different coins with the DAI, and you have the maker and then the DAI coin, and there's some complex relationship between how those are issued and how that value is stabilized between the two, which probably has some overlap with the algo based stable coins.
Yes, yes. I mean, to Dai's credit, though, I mean, they've really done great since they launched. They launched about a month before us. Um, Actually, a couple months before us, but I guess we announced the month after they launched, and they've done great, and it's definitely maintained stability, which has been impressive. Considering everything that's happened over the past year.
Yeah, so DAI launched, I guess, like you said, around the same time you did, but I think that they had that second currency, that second cryptocurrency, which was issued quite a bit before that, at least a few years
Yeah,
before
uh,
the DAI,
and
and yeah, and so the maker that was issued quite a bit before the DAI, but it wasn't until a few years later that they actually issued the stablecoin component of that.
right, right, right. But yeah, I mean, it's certainly interesting. Blockchain.com put out this amazing report back in I think it was September, and they are putting out an updated version very soon. I just saw a preview of it. And there are something like 53 stable coins in development or launched around the world. And my theory is that that is just completely unnecessary. I definitely don't think we need 53 plus stable coins. Maybe we need one for every major currency or something. But even now, most of those teams are not looking at different currencies. They're all looking to either also do US dollar or do some sort of algorithmic stablecoin. On the US dollar side, I think the appeal there of doing a US dollar backed stablecoin is that it's fairly easy to spin up, frankly. All of us have open source code, and if you really wanted to, you could probably just copy that. And then getting the banking relationships and stuff is a bit tough, but definitely easier to do it in the U.S. than virtually any other country. So you've seen a lot of teams do that, but it's clear that liquidity is king, and that if you can't get listed on the big exchanges, and you're just not going to grow that way. Then you also see dozens of algorithmic stablecoins launching. My theory there is that after Basis raised 133 million in April, teams saw that and said, okay, if we can raise even a quarter of that, if we can raise something like 30 or 40 million dollars, we'll be able to do that, and we'll be in a good place. And now that Basis has closed their doors and proven, both how difficult it is from a regulatory and technical perspective, I think a lot of those other teams will be dissuaded to continue working on these projects. And so we have 53 stablecoins now in development or launched. I would be surprised if another 10 of those gained a market cap over $20 million this year.
Yeah, so Basis was founded by Nader and a few other folks, and like you said, they raised quite a bit of funds from some top tier VC funds,
Yeah.
and then recently announced that they were returning all the funds, and they decided not to pursue the project further. I reached out to Nader. I mean, I had heard him speak at an event in Silicon Valley, like a year or so ago, and I wanted to get his thoughts on why Basis failed and what some of those challenges were, because I think that's like a really interesting story. Um, and obviously, there's a lot of upside, but do you think that the difficulty that they encountered was on the technical side for actually achieving this type of stablecoin through this algorithmic mechanism, or do you think that the issue that they encountered, the challenge, the roadblock they faced that caused them to return the funds was on the side of regulatory feasibility and legality of this? And obviously, this is just your speculation as an outsider, but I'm curious what your thoughts are in terms of what led to that decision to return and close up shop.
Yeah, I mean, if I remember correctly from the blog post they put out, they said that it was kind of a regulatory thing. If I'm remembering correctly, when they did the fundraise, they it definitely looked like they were kind of selling a security. And again, I think that's what they touched on in the blog post, where they said basically the transfer of their if again I might be butchering this, but the transfer of their second token would be limited to accredited investors, and that would really sort of kill the whole thing. And so in that sense, it was definitely regulatory. Um, Again, this is speculation, but I would be surprised also if they had solved all of the technical intricacies associated with this. If they did solve all the technical intricacies, I would love to see them, sort of publish some of that and allow other teams to build on some of that research.
Yeah, I think that there will probably be a number of stable coins that are asset backed, because it seems like, as you said, that is a lot easier of a task to accomplish from the technical and regulatory perspective. And maybe over time, with further research and further regulatory development, there'll be the some other algo based stable coins that appear, and Terra and Reserve, like you said, are some of the two that are working on that now. Um, so in theory, there could be stable coins, a market of stable coins traded against each other, crypto stable coins for each major currency that tracks the trading of the forex, spot trading on the forex market. So you could have like a market that is that is being traded alongside the actual forex markets, but just the cryptocurrency equivalent of those.
Yep, there's definitely a lot of exciting things still to develop in the stablecoin realm, specifically on the forex side.
Yeah. So there's forex, and then there's baskets of stable coins, and then bonds. So where is the revenue generated for these stablecoin projects like True US Dollar or Gemini Dollar or some of these other stablecoins that are asset backed? Where is it profitable for companies to develop this product, and how do they generate revenue from them?
Yep. So, different between the three models, but in the fiat backed model, the business model is that you earn interest on the funds held in escrow, right? So, it's the kind of same playbook that many of the sort of like new banks or things like Venmo use, where you're just holding people's money and earning the interest on that.
So in that case, is there a risk of like a bank run, or what the equivalent of a bank run, where everyone wants to get their funds back? I'm guessing it's not like fractional reserve, like a regular bank lends out funds, and under a fractional reserve model. So can you talk a little bit about the differences, how you're able to earn interest from the funds that are being held in reserve, but not be subject to the risk of that type of scenario where everyone wants to burn at the same time?
Yeah. So, all we're having our banking partner invest in is, overnight T-bills, sort of one-day note type stuff. So, it low interest, but it's definitely a scale game, right? I mean, the revenue earned on that at 200 million is okay. The revenue earned on that at 2 billion is really nice.
Mm-hmm.
I suppose that there is, like, if in some case everyone wanted to redeem 200 million on the same day, that yeah, I mean, honestly, even the discussions we've had with our banks, I mean, that is definitely possible. That's a clearly unlikely scenario, but it is still possible. I think they just kind of have to call early on some of these things.
And so you guys are also partnered with Nexo. Nexo is the crypto-backed loan platform. We actually had another crypto-backed loan platform on our podcast. Um, I'm blanking on their name right now, but so you guys have partnered with them. And so what does that partnership consist of?
Yeah, so you can basically put your, you can loan your TUSD to Nexo and then earn, I think it is 7% interest on the TUSD. And we've partnered with a couple of these different companies now. Nexo is definitely the biggest, but there are some smaller ones that we've had discussions with as well. And frankly, I'm not sure if those are public or not. So I don't want to mention that now, but there's a lot of these companies out there now where you can loan your crypto to them and then earn an interest rate on that.
Yeah. There's quite a few out there, and there's also some platforms that do like staking, where they're just kind of like a central platform where you can send your funds, and then they'll stake them for you on these protocols that offer staking type of rewards. Um, I'm blanking on the name of that platform too, but it's one where you can earn interest by, basically lending them your tokens, and then they use that on, for margin trading or, for staking. So like when Ethereum launches the staking model, you'll be able to just give them the tokens, and they'll, um, you know, hold them, earn interest on them, and give you a percentage of that.
Mm.
So
Yes. But like, there's all of these interesting, innovations and businesses being built on top of other businesses in crypto. And we definitely hope to keep seeing more and more of that. Whether it's on the lending side, whether it's on maybe the remittance side, or, I think that there's all these interesting places for stablecoins to play into.
yeah, absolutely. We're excited to see all the new developments in the cryptocurrency space with that will let people earn interest on their crypto. Um, so let's just go on and pause. We'll go off the record. So I've covered a lot of pretty much everything that I had prepared in terms of like the inner workings of how the platform works. Um,
Yeah,
is there any?
that was a lot of
Yeah,
great questions.
yeah. Thanks. Are there any uh, things that you think we missed that you think we should discuss in greater detail?
No, no, I that was very thorough. I think I got all my talking points in there too, so that was good.
Okay. And I just thought of that blown back to BlockFi. Have you heard of them? They're based in New York.
Yes,
BlockFi.
I've got an open email thread with them right now. I think they've onboarded with us. I just don't know that I don't know that they've seen demand yet to loan stablecoins.
Mm. Yeah. Yeah. We had Zach, the CEO, on the podcast in November,
Oh, cool.
and talked
That's what.
about,
Yeah.
yeah. So maybe we could briefly talk about the team that you guys have put together. You guys are a team consisting of uh, graduates from top schools like Stanford, and you're based in the Silicon Valley. So tell me a little bit about the how many folks you have on the team now, and how you guys spend your time, and what projects you have coming up.
So we are a team of, I think we're about 30 people now, give or take one or two. And yeah, we've got folks coming from all the good universities and big Silicon Valley companies that everyone seems to have on their resumes. I'd say the two big focuses for us, throughout the life of the company, frankly, and this has been consistent, has been engineering and really legal as well. You know, I've made the joke that crypto has been better for lawyers probably than anybody else. I mean, there's never been a better time to be a securities lawyer. When you have a bunch of well-funded projects that are operating in a gray legal zone, there's a lot of fees to be made. but on that note, we've hired a really great legal team as well. One of the first hires at Trust Token was our brilliant in-house legal Michael Bland, and we've recently hired another guy, Alex Levine, who was formerly at like the SEC, the OCC, and some other 3 or 4 letter government agency in the U.S. So, definitely really doubled down on the legal side of things and legal and compliance. In addition to engineering, pulled out a lot of great engineers from places like DoorDash, Snapchat, Consensus, etc. So that's been good. Project wise, what we're looking at now, we've still got some improvements to do on the engineering side to our app at app.trusttoken.com, making that as easy as is humanly possible for people to move in and out of TUSD and dollars. I think some other projects are, other stable coins, it seems to be difficult to move in and out. We want it to be as easy as possible. So continuing to do some work on that. And then also looking to build some sort of some kind of complementary or tangential things to TUSD to just make it easier to hold TUSD around the world, to sort of use TUSD as a bank account almost.
And can you expand on that? What, like, you mean like a hosted wallet where, like, similar to some other platforms that have that let users store their funds and access them and send them and that sort of thing?
Yeah, definitely. We don't have any sort of mobile experience now. A mobile experience is something that we've thought about as well. There's a lot of countries where we'd love to see people using TUSD, but frankly, the mobile adoption is very high in a lot of these developing countries, but the computer or laptop penetration is much lower. So, just making it easier for people to send, store, and hopefully be able to use TUSD eventually as well. I've been living in Asia for the past few months, and I'm in Shenzhen, China at the moment. And I mean, the experience with WeChat Pay and Alipay in Asia really is pretty amazing. I mean, I'll pull out my credit card sometimes, and I feel like I'm in the Stone Ages. I mean, people, kind of. I mean, I'm not joking. People will laugh at me if they see me pull out a credit card. So, to the extent that in some of these developing nations, that we could have TUSD act as a similar experience with QR code payments, I think that would be pretty amazing, and would really lead to interesting and profound growth.
And do you see the support for? Do you think it makes sense for brick and mortar types of merchants to accept crypto stablecoins, or is that sort of what's the word? I guess it's kind of unnecessary if they're already just accepting the fiat version of that.
Yeah, I mean, listen, like if you're a Whole Foods in the United States, you probably don't need to accept any crypto, right? You're fine with credit card and Apple Pay and cash. If you are in a, say, developing country where you want access to US dollars, or you live in a place that has a highly volatile or deflationary currency, and you prefer to keep things in US dollars up until the point where maybe you have to pay a bill and you need to convert into the local currency, I think TUSD holds a lot of strong use there that really hasn't been tapped into yet. So that's one of the things we're exploring at the moment.
Yeah, just as a side note, I noticed you on your website have Terry Lee as your Solidity engineer.
Oh, yeah.
I don't know if he still works for you guys, but he was an internship for our platform. He did an internship with us at Bounty Zero X before he left, and I think started working for you guys. And he did a lot of great work for us on the blockchain side. He's a Solidity engineer and helped us with our staking mechanism for our token. And it was a great member of our team. So happy to hear he's over working with you guys and hopefully doing a good job on your team.
Yeah, I had no idea. I knew he was at Consensus. I didn't know for like some of the stuff he worked on there. But yeah, Terry is an excellent engineer and also like a Division I swimmer, which is very, very cool.
Yeah. Great. So maybe one other thing we can talk about is what your daily responsibilities and how you spend your day as the business lead for Trust Token, and what your purview is at the company, and what type of daily work you do.
Yeah, certainly. So I'd say, like, historically, the three main buckets I've focused on have been, partnering with exchanges, OTC desks, and market makers. So the people that are most heavily using or enabling the use of TUSD right now. At this point, I'd say that we are integrated, with all the big exchanges. Binance will be OKX, traded and supported by the large OTC desks, Cumberland, Genesis, etc., and traded by many, many dozens of market makers and institutions and individuals as well. So we've done a lot of the heavy legwork there. Now we're really starting to explore some more partnerships, have maybe some deeper integrations with some of the wallets, start to work with a lot more of these lending companies, like Nexo I had mentioned, and then also just exploring new use cases of TUSD. I think we've got a good grasp on, how to get to 200 million. I think we've got a good idea of how to get to 300 million. And then the question is, how do we grow TUSD to a billion? Is it going to be all based on exchange traded volumes, or is there going to be, new use cases we have to develop? So spending a lot of cycles on that right now. And these are things like remittance use cases, helping teams to maybe fundraise using TUSD to pay out dividends on STO platforms, whatever it's going to be.
Yeah, that sounds like a lot of exciting potential use cases and integrations that you guys have
Yeah.
that you're working on.
Thank you. I put a little plug in there. If anyone's listening and would like to partner with us, feel free to just shoot me an email, just ryan@trusttoken.com.
Yeah. So trusttoken.com was where people can go to learn more. They can sign up and they can register, complete the KYC process, and then wire funds. And from within the app, they can receive the funds and then send them out. And then likewise, they can, convert their TUSD tokens to US dollar. So maybe we can just briefly talk about the trust token. Is there a date that you guys are planning on issuing that and launching the trust token?
Good question. I don't know. I don't actually know what we disclosed most recently, so I don't want to say anything on here that is incorrect.
Okay.
But the target is definitely this year.
Great. All right. Well, we're looking forward to hearing about that, and you guys are welcome to come back on again and talk about it when you're ready to make an announcement about that and share it with our audience. I think everyone would love to hear about it.
Yeah, that'd be great. And thank you for all the very thoughtful questions today.
Yeah, my pleasure. It was great having you on. Our guest on the show today is Ryan Rodenbaugh. He's the business development lead at Trust Token, and we'll have links in the show notes where people can learn more and follow them. So thanks, Ryan. It was great having you on.
Yeah, thank you. Have a great day.
Thanks for listening to another episode of the Bounty Zero X podcast. Please remember to subscribe to our podcast below. Check out bountyzerox.io, the #1 bounty hunting platform where you can complete work and earn cryptocurrency. Please consult your professional financial investment and tax advisors before making any investment in initial coin offerings. Bounty Zero X does not provide investment or financial advice and does not endorse or recommend investment in any ICOs advertised on the Bounty Zero X podcast or website.